Welcome again to Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Today we have again Mike Zuzolo, President of Global Commodity Analytics, and he will speak with us about the very difficult situation for U.S. ranchers and also the economic situation for all of us and its impacts on commodities. Mike, how are you these days?
Very well, Luis. Thank you for having me back.
Yeah, we've been talking a lot in the last few days about the impacts of COVID-19, and the economy has already started to work again, slowly but recovering. And the ethanol numbers just improved in the recent days. Isn't that true, Mike?
Yes, we still have our demand coming back with the summer grilling season, the summer driving season starting to show up. And the ethanol numbers in particular, Luis, were very supportive of the research and the analysis you and I have been talking about, in that we saw another increase in production. We're now almost 25% off of the production low point that we had at the height of COVID-19 when the ethanol production facilities all shuttered. So we're now about 25% off that low, and we also have stockpiles or supplies of ethanol now at their lowest level since early February, which would be before COVID-19 hitting the agriculture market. We did see the unleaded gasoline stockpiles increase a little bit, but I'm not as concerned about that as long as we keep seeing the driving season continue to increase. There is a big jump coming in terms of many states like my own here in Kansas. Just in a couple days, we will be jumping from phase 1 to phase 2 and opening up quite a bit more by doing that in terms of what we allow as far as number of people at a gathering and things like that. So we are on track demand-wise, and I would say that the crude oil market is on track demand-wise, and I would say the livestock sector continues to be on a healing and recovery footing as well, with the meat production and slaughter rates starting to come back pretty nicely. I was surprised, in fact, the weekly hog or pork production last week actually was up 19% from the prior week, and we're now only down about 9.5% from where we were a year ago for the same week that we killed. So I think we are on our way back. I think one of the things that we have to watch, though, is what's happening in Brazil and Argentina with COVID actually spiking. And I believe the Brazilian cases went above the United States this week. It's very concerning. And I think that's where it looks as though this virus is a lot like a regular flu, where you go into the fall and winter and it really has a lot more ability to be contracted by a human being. So this is something that we really have to watch.
Yeah, that's true. And how the barges, you live close to the Missouri River. How are the barges operations at this point?
Yeah, the Illinois River is getting ready to shut down for work on its system and dredging. And so the market has been very aware of that for the past 6 months. We're starting to see the basis levels drop pretty substantially for river terminal deliveries, because the elevators along the rivers are trying to get trying to drop their supplies and their stocks of grain. And especially given what's going on in the macroeconomy and the tensions between the U.S. and China rising again, that just-in-time inventory is not being given up. In fact, it's probably being embraced more, so that commercial elevators who can't let corn or beans go down the river in Illinois don't want to get stuck if they have a 50 or 60 cent price drop on something really bad happening. So here on the Missouri, we are continuing to see a pretty normal traffic from what I can tell. It's never that great up this far north on the Missouri for us, Luis, and you get down around St. Louis and it sounds like it's about normal from what I've seen. Probably the railroad traffic is the best thing that we've seen pick up because of our export sales, and our export shipments are starting to come online a little bit better. It seems every week we get a little bit better and a little bit more traction.
Yeah, talking about exports, this week wheat has improved again. Its prices getting over five. And how do you analyze the wheat price improvement?
Yeah, that's a really timely question because I think that what we're seeing in the wheat supply arena, whether we're talking about the Black Sea or here in the United States or in Europe, I believe that we're on a same trend that we were when it came to Argentina and Brazil's corn and bean production. The trade came in very big, very large production numbers, assuming record production numbers just because of planted area, and they were very late on coming down on production numbers. And we saw that with Agrural again this week on Brazilian corn. I think we're going to see the same thing on the wheat, Luis, in both the Black Sea and Europe, as well as the United States. In fact, the Kansas Wheat Tour just got wrapped up this week, and they came in, I believe, at around 285 million bushels for wheat production in our state of Kansas. I believe that USDA is up around 306, 310 million bushels. So that number could go down if we don't have ample rains. That's the interesting part about those tours. They kind of price in normal weather from here on out whenever they're out there doing their crop tours. So I think the wheat market has been able to find support off of that, and also off of the fact that the Russian ruble, before the hostilities increased again in the financial markets between the United States and China on Thursday, the Russian ruble had just made, I believe it was a 9 or 10 week high against the US dollar. So we were gaining on buying power, or excuse me, on selling power of our wheat. And at the same time, supplies were dropping in Russia. So that was a big, big thing this week, but it hasn't been fully played out because we saw another return of a safe haven buying of the US dollar when China made their move on Hong Kong.
Yeah, and are you still saying to wait for a rally in the case of wheat, or
I
is it?
am right now. Yeah. Yeah. I think that we could have even tighter supplies and lower production as producers get on the combines and actually harvest it and have essentially a counter seasonal rally. But much depends on that dollar remaining tame, as we've talked a lot about.
Yeah, the dollar against the Brazilian real, at least this week, for you U.S. farmers, you got a bit of relief this week against the U.S.
Yes, you notice. Yeah, you notice that in almost all of the major currencies in the emerging markets, except Argentina. Which, when I talked to clients and subscribers this week, I talked about China, watching them because of their big national Congress get together, their annual Communist Party get together, and also Argentina's default. Which, again, we continue to just be on a. It seems like a hairline before we see Argentine default again.
Yeah, today will be a final deadline for a payment, and Argentina is entering a technical default right now.
That's
But
what I've been understanding as well.
yeah,
Do you think they will, Luis?
they are still negotiating, but there is a technical default already.
Does their leader necessarily mind default, or have they pretty much, in your opinion, have they pretty much accepted it at this point in their government?
More or less, because he's kind of proud and very lefty, and so they like to play with this speech of teasing global leaders and central countries like the US or Europe, but they will still be negotiating.
Uh-huh. Yeah, one of the things that not many people are talking about in the financial markets right now, because of the banks looking so healthy on the balance sheet, is a systemic risk where one bank goes bad and then four or five others go bad because they were invested in that. That could happen as well with a major country default as well. So that's something we certainly have to look at, because all these things add up to historically buying the dollar. And I think the dollar was up around 120 back in 2000, 2001, when the Argentines defaulted the
Yeah,
last time.
Argentina is not a very poor country, but it always had this problem with foreign currency, that the local currency does not get confidence from their own population, and the government prints a lot of money. So every time there is a large devaluation and the government gets debt in dollars, issues money in dollars, so uh, is basically bankrupt over and over again.
Yeah, and the IMF tends to always say yes to those countries as well. We saw that in Greece, we saw that in Turkey not long ago. And, you know, Turkey is not doing so well either. And they're another big player in the Middle East that could really change the dynamic in the wheat market too.
Yeah, so I want to get back to the issue that I mentioned before. First, don't forget to subscribe, to give us a like, or to share our content with our friends. But I would like Mike to comment a little bit of some farms that are closing right now. Their numbers don't close. I saw another interview where a Texas Ranger was really pissed off with meat packers and the treatment he gets from meat packers. But I think the point that he had there is that there is market concentration among meat packing in the U.S. right now, with four of the meat packers getting 85% of the market. So the ranchers get less leverage here. How do you see all of these market talk?
Well, it is all true what you just said, and you know it's interesting because the beef is the least vertically integrated as opposed to the pork and poultry. The numbers that I have looked at would suggest that over 40% of the hog kill or the pork that we produce in the United States is actually packer owned at this point. So the same processor that is processing the hog is owning 40% of the hog supply, and you know in that sense we are getting noticed more in the past when we have this processing issue because the large players are getting hit hard right now, Luis. And I think that's why the administration and the government have been so active in giving these direct payments out. These direct payments will help avert some ranchers from going bankrupt. There's no question, though, Chapter 12 bankruptcies around the United States have been going higher for 5 straight years. They're in the hundreds every year. I would say they would be in the thousands had it not been for some of the direct payments. Getting back to the ranchers and getting back to the beef cattle, one of the things that I think is real tough to deal with analytically for me is when the administration talked about limiting imports of cattle and taking on more domestic cattle. That sounds nice, but the markets don't like that because all of a sudden you put a bullseye on a country like Mexico and you realize that this is another trade issue. And it's not unlike what we're dealing with the United States and China. So I think in that respect, the more political rhetoric we hear about this and the less market improvement that we see on our own because we're coming out of COVID, the harder it's going to be on the rancher, in fact. And I think that's really important to stress that. What I've told ranchers at this stage, and I had a conference call yesterday with a couple big ranchers in Kansas and talked to them about, you know, specifically as we get past the summer, if the summer grilling season comes back and we can restock these shelves and the restaurants, and most importantly, the schools come back, that's where the institutional meat is not being consumed. That's where we get our demand back and we can have a much better Q3 and Q4 for prices.
Yeah, in terms of a comparison, how worse would you say that a rancher are in your location compared to a corn grower, for instance?
Yeah, I'll give you an example. Back when ground beef prices are currently trading around $4 a pound at the USDA number. Back when we were that high was back in 2015. Around that time period was 2015. We were around $3 a pound, and fat cattle prices were $150 to $155. So we're literally $50 cheaper. Some of the private analysts out there think that the packer hedge margin right now is running close to $1,000 a head for cattle right now, and $300 to $400 a head on hogs. And so the numbers are staggering in terms of profitability if you can get those animals through the plant and get them processed. So it is going to be a lot harder on the rancher because you can't store cattle, you can't store hogs, you can't store your birds, you can't put them in a bin. And so the rancher has to either cull them or euthanize them or sell them at 20 or 30 cents on the dollar. And I think that's maybe, I think, and I'm hoping that we're through the worst of that at this point. But if we have another flare up of COVID, or we get into it and the dollar goes sharply higher because we get into another trade issue with Canada or Mexico or China, I think those prices may come back and hurt us even more.
And what other farm sectors you see as very critical as well?
The northern plains up in dairy country and in the area where they rely a lot upon Pacific Northwest export shipping out of Oregon and out of Washington State. They are much like the ranchers and livestock producers. They've been hit for about 4 or 5 straight years, and that's where most of the bankruptcies that we've seen over the last couple of quarters are originating from. I think over 40% came from the northern plains just in this last quarter of update by the Farm Bureau.
For them, what's the solution?
Well, I think the best solution they can have is not to push the planting past the prevent plant date in the situation of the corn and bean growers, and that's coming up May 25th. In most of North Dakota is the corn deadline for prevent plant before you lose certain amount of crop insurance. They did not take prevent plant as much last year, and then they had a terrible harvest, and that was a really big damage to their bottom line, their finances. So I think you got to be as conservative as possible in that area this year.
Mike, Zuzolo always bringing hope for us.
Why would you be in agriculture if you're not hopeful?
Yeah, that's really true. Mike, thanks again for your time. Enjoy the Missouri River right there.
You too. Thank you, Luis.
The summer is about to start.
Yes, that's right. Get ready for the mosquitoes.
Yeah.